On July 29th, a payment is about to arrive in your bank account, and it won't be the same amount you received last month. If you're a Canadian senior collecting old age security, something changed this month. Your payment increased. At the same time, a hidden income line that decides how much of that money you get to keep quietly moved. And for some seniors watching this, that payment on July 29th may not arrive at all. Three important changes happened in the same week, yet almost nobody explained them in plain English. So over the next few minutes, I'll show you your new payment amount, exactly what your old age security and your GIS are worth this month, the updated income threshold the government uses to claw back part of your pension, and the one simple mistake that is freezing payments for thousands of seniors who did nothing else wrong. And I'll tell you right now, that last issue is the one I need you to hear most because it's completely fixable, but only if you know it's happening. Stay with me because by the end of this video, you'll know exactly how much you should be receiving and whether you're one of the people at risk of losing part or all of that payment. My name is Alex Carter, and for 15 years, I worked inside Canada's retirement tax and benefit system. I spent those years dealing with pensions, paperwork, and the quiet rules that determine how much money seniors actually receive. I'm not a lawyer and I'm not here to scare you. My goal is simple, to take the changes that are easy to miss and explain them in plain English so you can keep every dollar you're entitled to. So let's begin with the good news because there is some, and it affects every Canadian senior receiving old age security. Your OAS payment increased this month. Every 3 months, the government adjusts these payments to help keep up with inflation and the rising cost of groceries, housing, and everyday living. For July, August, and September, that adjustment is a 1.2% increase. Now I know a 1.2% increase doesn't sound very exciting, but let me show you what it actually means in real dollars because this is the number you should remember. If you are between 65 and 74, your maximum old age security is now about $752 a month. And if you are 75 or older, it's higher, about $827 a month. And notice that gap because a lot of people don't know it exists. Once you turn 75, your old age security is permanently about 10% higher than someone in their late 60s gets. That was a change brought in a few years ago on the reasoning that the oldest seniors tend to have run down their savings and lean hardest on this pension. So if you've recently crossed that 75 line, your payment should have stepped up. And if it didn't, that's worth a phone call. Those are the new maximums in effect right now, showing up in that payment on the 29th. And if you add up all 4 of this year's quarterly adjustments, old age security has risen a little over 2% across the past 12 months, quietly in the background without a single letter landing on your doorstep to tell you. So the first thing to do when that deposit lands is simple. Look at it. Look at the actual number because it should be a little bigger than last month's. And if it isn't, that tells you something important. And we're going to come to exactly why in a moment. Because here's the thing, the OAS raise is only one of the 3 things that moved, and honestly, it's the smallest of them. The second one is bigger for a lot of you, and it's the one that can swing your income by hundreds of dollars a month in either direction. It's your GIS, the Guaranteed Income Supplement. For those who don't know it by name, the GIS is the extra tax-free top-up that the government pays on top of old age security to seniors with lower incomes. And if you get it, it is often the difference between just scraping by and actually being okay. And here's the crucial thing that almost nobody realizes about the GIS. It is recalculated from scratch every single July, not once when you retire, every year. And it gets recalculated based on one thing, the income you reported on your tax return for the previous year. So the payment you're getting from now until next July is built entirely on your 2025 income, the return you filed this spring. Now think about what that means because this is where it gets personal. If your income last year went down, maybe you stopped a bit of part-time work, maybe an investment stopped paying out, maybe a spouse passed and the household income dropped, then your GIS this month could go up. Sometimes by a lot because the government now sees you have less coming in. That's money you may not know is waiting for you. But it swings the other way too. If your income last year went up, maybe you took money out of an RRIF, maybe you sold something, maybe you cashed in an investment, your GIS could go down this month or stop entirely. And if you weren't expecting that, it can be a genuine shock when the smaller number lands. Either way, the maximum GIS for a single senior is now about $1,123 a month. And remember, that money is completely tax-free. It doesn't get added to your income, you don't pay a cent of tax on it. It's yours. Stack that on top of your old age security, and a single senior with little other income can be receiving somewhere in the region of $1,875 a month from these two programs combined. That is a real amount of money, and it is exactly the kind of money that's worth understanding down to the dollar, which is the whole reason I make these videos. Let me make this real with one example, because it's the swing that catches people. Picture a woman, I'll call her Margaret, up in Sudbury, 71 years old, living on her own. Last year, 2024, she did a little part-time bookkeeping through the winter, a few thousand, nothing dramatic. This year, she stopped. So when Service Canada recalculated her GIS this July off her 2025 return, they saw her income had dropped and her GIS went up by well over $100 a month. Margaret didn't apply for that. She didn't fill in a form. It happened automatically because the July reset finally caught up to the fact that her income had fallen. Now flip it around. Her neighbor, same age, took $8,000 out of an RRIF last year to fix a roof. Same July reset, but his income went up, so his GIS came down. And if he wasn't expecting it, that smaller July payment landed like a cold shock. Same rule, same month, opposite directions. That's the GIS. It is always looking 1 year in the rearview mirror at the income you already reported. And there's a version of this for the younger spouses too, which people forget. If you're between 60 and 64 and your partner receives the GIS, there's a benefit called the allowance. And if you've lost a spouse, there's the allowance for the survivor. Both of those are income tested. Both get recalculated this same July off the same 2025 return. And I'll say this now and come back to it. Both can be suspended for the exact same reason the GIS can. Keep that in the back of your mind. So that's two of the three. Your OAS is up, your GIS has been recalculated on last year's income. But I told you at the start there was a third thing that moved, a quiet line, one most people have never even heard of. And this one matters most to those of you who have done reasonably well for yourselves. It's called the OAS recovery tax. Most people just call it the clawback. And here's how it works plainly. Old age security is not unconditional. If your income is high enough, the government starts taking some of it back. 15 cents of every dollar of OAS is clawed back once your income climbs above a certain line. And that line is not fixed. It moves every July. For this year, for the period from July 2026 through June of next year, the clawback line has moved up to $93,454. So what that means is this. If your net income is under about $93,000, breathe easy. The clawback does not touch you at all, and this part isn't your worry. But if your income is above that line, then for every dollar over it, the government quietly takes back 15 cents of your OAS. And because the line moved this year, the exact point where that begins is different than it was last year. Let me put a real number on it, because 15 cents on the dollar is easy to wave away until you see it. Say your income this year comes in at $100,000. That's about $6,500 over the line. 15% of that is a little under $1,000. So roughly $1,000 of your old age security is gone, clawed straight back over the course of the year. And the further above the line you go, the more they take, until eventually, at a high enough income, the OAS is clawed back entirely and you're left with nothing. So this is not a rounding error for the people it touches. And here's why the moving line actually matters to you. Because the threshold went up this year from about $91,000 to $93,454, the government is now letting you earn about $2,500 more before the clawback even starts. That's a small gift if you're near it, and it's exactly the kind of line worth planning around because there are legitimate, ordinary things you can do to keep your income under it. Splitting pension income with a spouse so it's not all landing on one person's return. Drawing from a tax-free savings account instead of an RRIF in a year you're close to the edge. Timing a big withdrawal for a year when your other income is low. None of that is a loophole. It's just knowing where the line is and stepping around it on purpose instead of tripping over it by accident. If you're anywhere near that threshold, that is a conversation worth having before the end of the year, not after. And while we're here, let me clear up the confusion that sits underneath all of this because it trips up so many people. Your old age security is taxable income. It counts. It goes on your return, and in a high enough year, it can even push you toward that clawback line. But your GIS, the top-up we spent all that time on, is not taxable, not counted, not touched. Two payments landing in the same bank account on the same day, treated completely differently by the taxman. And I mention it because this is exactly the sort of thing that makes a senior throw up their hands and decide the whole system is too complicated to bother with. And that feeling that it's too complicated, I'll just leave it, is precisely what costs people money. It's what stops someone claiming a GIS they qualify for. It's what makes a man like Bill decide not to file. None of this is too complicated, it's just never explained in plain words. That's the entire job of Alex Carter, to take the thing that was built to be confusing and make it simple enough that you can act on it. So now you know the three things that changed this month. Your OAS went up, your GIS was recalculated on last year's income, and the clawback line moved. And if you're sitting there thinking, all right, Alex Carter, so I just wait for the 29th and check my number. Yes, but there is one more thing, and this is the one I promised you at the very start, the one I most need you to hear. Because unlike everything else we've talked about, this one can take your money away completely, and it has nothing to do with how much you earn. Here it is. Every one of these recalculations, the GIS, the top-ups, all of it depends on one thing above all else, that you filed your tax return for last year. That's it. That's the whole trigger. Service Canada does not guess your income. It reads it straight off the return you filed with the CRA. And if you did not file your 2025 tax return, the one that was due at the end of April, then Service Canada has no income to recalculate you on. And when that happens, they don't just guess and keep paying you, they stop. Your GIS can be suspended starting this month. Frozen. And I want to be very clear about who this hits, because it is not who you'd think. It is very often the seniors with the lowest incomes, the ones who owe no tax at all, and who therefore assume, quite reasonably, that they don't need to bother filing a return. And that assumption is the trap, because even if you owe nothing, even if your income is tiny, that tax return is the key that unlocks your GIS every single year. Miss it, and the very benefit you rely on the most is the first one to switch off. Let me make that one real too, because I've seen it more times than I can count. Picture a man, call him Bill, out in a small town, 78, a modest pension, and his GIS, and that's it. Bill owes no tax. He hasn't owed tax in years. So a while back, he quietly stopped filing a return because what's the point? He doesn't owe anything. And for a couple of years, nothing happened. Then this July, his GIS payment simply didn't come. No warning letter he understood, no phone call, just a payment that wasn't there, and a man staring at his bank balance wondering what he did wrong. And the answer was nothing, except the one thing nobody ever told him mattered. He didn't file. That's it. Bill isn't careless. Bill is exactly the person this rule punishes hardest. The low-income senior who reasonably assumed that owing no tax meant needing no return. And here's the part that should make you file even if you think none of this applies to you. That tax return doesn't just switch on your GIS. It's the key to a whole set of things. Your GST and HST credit, that quarterly payment, gone if you don't file. Provincial credits and top-ups, many of them tied to the same return. The federal climate payments, where they still run. All of it flows from that one piece of paper. One unfiled return can quietly shut off 4 or 5 different streams of money at once, and most people never connect the dots. So if your payment on the 29th is missing, or it's suddenly far smaller than it should be, do not panic and do not assume you've been cut off for good. The most likely reason by a mile is a tax return that didn't get filed. And the fix is exactly what you'd hope. You file it. As soon as you file that 2025 return, Service Canada can recalculate you and, in the normal course, restore your GIS. And importantly, they can back pay you for the months you missed. So the money isn't lost, it's just been sitting frozen, waiting. But nothing thaws until that return is in. So if that's you, if you know you haven't filed, the single most valuable thing you could do after watching this video is get that return done this week. Not next month, this week. And if you can't do it yourself, there are free tax clinics for seniors on modest incomes in most communities. A real person who will sit with you and file it for nothing. Now, how do you actually check any of this without sitting on hold for an hour? The cleanest way, if you or someone in your family is comfortable online, is a My Service Canada account. You can log in and see your old age security and GIS amounts, your payment history, and whether anything's flagged. If online isn't for you, that's completely fine. A phone call to Service Canada does the same job. And I gently suggest picking a quiet mid-morning, mid-week to call and having your social insurance number in front of you before you dial. Ask them two plain questions. What is my current payment amount? And is there anything outstanding that's holding it up? That second question is the one that surfaces an unfiled return. Now, before I give you the exact short list of what to check, the handful of things I want every one of you to actually do, let me mention one thing. Because a lot of you write in asking where to keep all of this straight, everything I cover, the programs, who qualifies, how the amounts are worked out, the deadlines that switch your money on and off, and the exact words to use when you call Service Canada, I put into one plain English guide called the Canadian Seniors Money Playbook. It's written big and clear. It reads on any phone, and it's the thing you keep in the drawer for the day a question comes up. If you want it, the link is in the description below. Either way, here is exactly what to do. So here is your checklist, and it's short on purpose. First, when that payment lands on the 29th, actually look at the amount and compare it to last month's. If it went up a little, good, that's the raise, everything's working. Second, if it went down or it's missing, don't panic. Ask yourself one question first. Did I file my 2025 tax return? Because 9 times out of 10, that's the answer, and filing it is the fix. Third, if you're a lower income senior and you've never claimed the GIS, this July reset is the perfect time to check whether you now qualify, because your income may have dropped enough to open the door. And fourth, if your income is close to the $93,000 line, it's worth reviewing your numbers, because a little planning around the clawback threshold can save you a significant amount of money. Let me bring it all together. This month, 3 things changed, and they all show up in that one payment on the 29th. Your old age security increased to about $752 a month if you're 65 to 74, and about $827 if you're 75 or older. Your GIS was recalculated using last year's income, and the maximum for a single senior is now around $1,123. The OAS clawback threshold also increased to about $93,454. But the most important thing to remember is this. If your GIS suddenly stops or drops, check whether your tax return was filed. For many seniors, an unfiled return is the most common reason payments are suspended, and it's completely fixable. The government won't call to explain these changes. They happen quietly, and it's up to you to stay informed. That's why paying attention to your payments and understanding these rules is so important. If this video helped you, please check the pinned comment and the description for the key numbers and helpful resources. And subscribe, because every week I explain important changes in plain English so you always know what's happening to your retirement income before it affects you. I'm Alex Carter, take care of yourselves, and don't forget to check your payment on the 29th.